Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including news of dodgy Aussie jobs data. But first, the IMF, which is showing heightened concern over a slowing world economy, said overnight that cash-rich countries like Germany need to step up large public investments to help keep the flagging economic recovery on track. The comments come from both the fund's managing director and its lead economist and reflect growing concerns within the IMF that Germany, which recently passed China as the country with the largest trade surplus in the world, is not doing enough to spur growth in Europe. The same report expressed concerns that continuing low interest rates were leading investors to buy riskier assets as they seek better returns. They called for rates to rise to ensure investment decisions were being made on a more realistic basis. Staying in Europe, the EU said overnight that it had approved plans for the construction of Britain's first nuclear power station since the early 1990s, after government subsidies for the project were reduced. The decision appears to clear most of the obstacles for the plant at Hinkley Point in southwest England, which would produce about 7% of Britain's current power supplies. It won't be operating before 2023. In the US, their federal budget deficit fell by nearly a third during fiscal 2014 to $486 billion as federal revenues grew far faster than spending. The US federal deficit will come in at 2.8% of GDP as entirely sustainable at these levels. In Australia, the credibility of its monthly jobs figures, arguably the most crucial gauge of their economy, has been thrown into doubt after the ABS confirmed problems with its July, August and upcoming September figures. Those amazingly good August employment numbers are likely to have been a mirage. In China, we should note that its Golden Week holiday has just ended. In New York, US Treasury 10-year yields have fallen yet again, now at 2.35%. In fact, New Zealand swap rates opened today at their flattest in the 2-5 differential since December 2012. Central banks and the IMF may be seeing froth, but bond markets don't. And the oil price has now fallen again and is now at $87 a barrel, with the Brent price at $91 a barrel. Not only were US petrol and gas inventories higher than expected last week, official forecasts say fossil fuel demand will be higher than expected this northern winter because temperatures are not expected to be so cold. Last year's temperatures were at a 10-year low. Gold is down too, today at $1,207 an ounce. On the other hand, stocks are higher in late trade in New York. We start today with our currency a little lower against the US dollar than it was at this time yesterday. New Zealand dollars at 78.1 US cents, at 89.2 Aussie cents, and the TWI is at 76.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.